Okay, good morning. Time now 8 a.m. On the Friday, April 14th, 2023, in Japan Standard Time. Welcome back to another edition of the World Bank Tokyo Online Morning Seminar. My name is Koichi Omori. I am Senior External Affairs Officer of the World Bank based in Tokyo. Every spring and fall, each of the World Bank's regional chief economist offices publish the regional economic update, focusing on the economic outlook and perspectives, and also key issues of the regions. Then we have established a good tradition of featuring each one of them when released. So this spring, we would like to start featuring the East Asia and Pacific version of it, which was released on March 30th, about 2 weeks ago. Connecting us from Washington, we have Ergis Islamaj, who is the senior economist in the office of the chief economist for East Asia and the Pacific region of the World Bank. Ergis, good morning, good evening to you. Thanks for joining. Can you hear me?
Hi, Koichi. I can hear you fine. Good morning to you.
Great, thank you very much. So the next 30, 40 minutes, we are going to listen to Ergis sharing the main point of the East Asia and the Pacific Economic Update, April 2023 edition, which was subtitled Reviving Growth. Following Ergis' keynote presentation, we'll read your question that we received in advance. If you did not have opportunities to send your question in advance, please do so by sending your questions using the online form posted on the announcement page of the seminar, or you can simply post your questions on the chat section of the YouTube screen. So I'll read your question on behalf of you, asking Ergis to respond. With that, I would like to ask Ergis to come in and formally to start your presentation. Ergis, over to you. Thank you.
Thank you very much, Koichi, and thank you very much to everybody connecting. You are our most loyal audience, and we always present it first to the Japanese audience right after we release this update. So this is our first seminar outside the dissemination event. So basically, let me start. As always, we're going to talk a little bit about recent developments and the prospects of growth for 2023. And then in this update, what we do, we do something different. We try to take a longer view of growth, like to see what has been happening in the region for at least in the 2 decades, 2.5 decades, quarter century since the Asian financial crisis. And then after that, we see where the region stands. We talk a little bit about what happened during COVID and other shocks, and then the looming challenges that we think are pertinent for this region going forward. Now, so most of the countries in the region, they recovered quite robustly from the pandemic shock. China, but also Vietnam stand out with output now around 15% higher than pre-pandemic levels. Other countries are also, catching up, and they, most of them have surpassed pre-pandemic levels of output. Well, not Japan, but so some discrepancy here because this is quarterly data, this is annual data, and things can look a little different sometimes. But some Pacific islands still remain below pre-pandemic levels. So just a side note, we don't cover Japan in our update in the United States because the World Bank focuses on middle income and low income countries, not on high income countries. But for the purpose of this presentation, wherever possible, I try to integrate some facts about Japan just to make it more closer to home to some of you. So what, basically if you read around, yes, there are lots of risks with the IMF, with the World Bank, everybody's talking about this risk, but generally speaking, there's a positive sentiment about short-term growth. And this short-term growth, is, in our region at least, has been primarily driven by strong private consumption. Several countries, the pent-up demand from the pandemic restrictions once they released those on demand, especially beginning of or mid-2022, we saw an acceleration in consumption, but also goods exports have been strong for most of 2022, at least for the first half. But now there are signs of weakening, both in domestic demand and in foreign demand for the region. Just keep this in mind going forward. So at the same time, these countries benefited from policy support, both fiscal policy and monetary policy support when these shocks hit them one by one. For example, look at this chart on the left that I put here. Here we show change in structural balance. It's a little bit of a technical notion, but notice that in 2020, where we know all of these countries increased their fiscal spending, this measure became, so this change in structural balance became negative. So negative means more expansionary fiscal policy. In 2021, some countries tightened, some countries continued increasing again, but by 2022, only China had an expansionary fiscal policy, whereas the other countries in the region had a less expansionary fiscal policy. Right, so again, they could be running deficits, but less so than in the previous period. And the monetary policy also became less supportive. So on the one hand, the interest rates, the policy rates in the region are still much lower than in other emerging markets and developing economies. But we saw starting in 2022 that in several countries, policy rates started increasing. Basically, we conclude that monetary policy is also less expansionary than before. So to sum up, the region has been recovering. Things are going, all right. Risks remain, of course. At the basis of this recovery was strong domestic demand and, strong, robust export growth. Both are declining now. At the same time, policy was supportive, now is less so. So with this in mind, we see this takes us forward to 2023. What do we say about 2023? Well, in addition to what was going on in the region that I just told you about, 3 international developments will continue to shape economic performance in the EAP countries. First, global growth is expected to slow. This is led by US and Europe, mostly, because of what is going on with increased interest rates. There was like a period of boom of fiscal spending after the COVID crisis, and that has wound down. And also they're being hit by high commodity prices, right? But global growth is going to slow down. This will dampen exports. The second development is that commodity prices, even though they have come down from their recent peaks, they still remain elevated. And there's uncertainty, anything can happen in the future. High commodity prices can erode consumption. And at the same time, financial markets have become tighter and still there's uncertainty there about what's going on. Increased interest rates in the US led to financial tightening in the region as well, and this will inhibit investment. So these 3 developments will continue to shape growth outlook in the region. So as a result, we predict that China will grow, and that's because China was still fighting COVID in 2022, whereas in 2023 they relaxed and there has been a rebound. But other EAP economies will see a decline because they're going to be affected by these external shocks. And even if China is a positive development, China's recovery right now is focused on consumption and not as much in exports. So it's more like domestic consumption. Therefore, whatever benefits come to the region will come with a delay. And before that, the region will be affected by the rest of the world, which is US and EU. Japan is also recovering slightly, and this has to do, you guys probably know it better than me, because there were still some restrictions in place in 2022 and some pent-up demand that, is being rolled over in 2023. Now, going forward, basically, this is our short-term recent developments. We could have written like an update like this. Basically, this is what happened to growth in 2022. These are the main risks to growth. This is what's happening in 2023. Clear and simple, that's very useful, but we said let's now take a longer view of growth and structural change, especially since now we are almost at the landmark, basically 25 years after the Asian financial crisis. And what we argue in the report is that growth in the developing East Asia and Pacific economies has been faster and more stable than in much of the rest of the world, including advanced economies, especially in the last 2 decades since the Asian financial crisis. And we kind of have also other evidence about this, because during both the Great Recession and the COVID pandemic, the economies of the region have proven more resilient than most other economies. Consequently, countries in the developing countries in the EAP region have all transitioned either to lower or upper middle income status. So at the World Bank, we have this low income, the middle income we divide in lower middle income, upper middle income, right? And then after that, there's transition to high income. So basically, in our region, we have no low income countries. Everybody, because of this very good macroeconomic performance in the last 2 decades, has transitioned to middle income category. Now, that is great, but we also argue in the report that these achievements should not obscure a fundamental problem. And this problem is that even before COVID, the remarkably rapid catch-up that this with high-income countries that this region was contributing to was running out of steam. So what you see here is basically this catch-up or convergence coefficients. A negative and statistically significant coefficient, and these bars here are the standard errors. So if all the bars are below 0, it means that the coefficient is negative and statistically significant, like in this area here. That will mean that catch-up is happening. Poorer countries are growing faster than the richer one, and there is unconditional catch-up. But we saw that, in the later years, this was not happening anymore. And again, we had to stop here because this is a long-term exercise, so we needed at least like 5 or 10 years of data to show that. Now, on top of that, productivity growth has been declining. Labor productivity has been declining, total factor productivity has been declining, and even though that labor productivity that was happening, although it's a little more limited because it was declining, it's mostly driven by capital deepening and not by growth in total factor productivity, which we think has more to do with innovation and it's growth enhancing in the long run. So interesting, right? Something is happening. Now, coincidentally, at the same time that we see these developments in growth and productivity, we also see that, as people move, as the share of agriculture, GDP, but also employment declines in almost all economies, the share of manufacturing in GDP increased. This started in the 50s all the way to the 90s. But starting in Asian financial crisis for some countries, or the global financial crisis for some other economies, so at least somewhere in between these two areas, we saw that the share of manufacturing peaked. They peaked and they started declining in several of these economies. With the exception maybe Cambodia and Vietnam that are still industrializing, but still the share of these economies remains lower than in other economies of the region. The share of services has been increasing as a result, right? People are moving not to manufacturing anymore, but they're moving to services. Now, we also did some other exercises in our update that I encourage you guys to go take a look about, because here I'm just showing the share of GDP. But what does this imply? What does this mean about the sector reallocation of labor that underlies this pattern of structural change? Well, basically the reason, I mean, the fact that manufacturing is flattening, whereas and people are going now to services and not to manufacture anymore, suggests that the structural change that is happening in the region is not favoring productivity growth. China, Malaysia, Indonesia, Thailand, the shift of labor out of agriculture slowed down after the 2000s. And people now, they did not move into high productivity manufacturing or high productivity business services. But where they moved is relatively low productivity sectors such as trade and construction, right? So putting it all together, we saw stable and steady growth, but not productivity enhancing structural change. The question is why? So we try to tackle this question in the update. We probably don't have the most definite answer, but what we think is happening that since the Asian financial crisis, the region has focused on sound macro fiscal management, and they have done a really good job at it, but there has been less focus on growth enhancing structural reforms or productivity enhancing structural reforms. And, you know, again, things are not bad, but this is something that will matter going forward in the long term. Now, again, not all these shifts to services is necessarily bad, but so far, as I said, you know, services have been on average less productive than manufacturing, and the structural change has not been the most productivity enhancing. But the shift from manufacturing to services need not go against the productivity growth in the future. And the reason is because the digital revolution, which received a boost during the pandemic, and this is what this chart on the left is showing, that a lot of small firms, a lot of businesses adopted e-commerce technology. So basically, these online sales, and zero is the pandemic, and that the adoption of those technologies really picked up after the pandemic. So this is transforming services sectors. Now, on the one hand, more services are becoming internationally tradable, and also the emergence of these digital platforms is transforming even domestic services like retail, finance, and transport and tourism. And, you know, they're being able to serve to better the population, and also internationally people connect and find out what they need when they visit the country. Now, what this chart on the right shows is that this adoption of this of technology in services is correlated with higher productivity growth. So going forward, we are actually hopeful that, you know, services will continue to increase in productivity. Right? Some services are already very high productive, like say business services, but they don't attract a lot of employment. But then other services like retail will also increase in productivity, and they do attract, you know, a large share of employment. But so far, I mean, this is just us being hopeful for the future. It is not clear whether, you know, we see there will be an increase in employment or not, or is it just the skilled workers that are going to benefit, basically increase their wage because of these technologies. So again, there's a lot of ways to explore and narrow that gap, basically making sure that these technologies are available to everyone and everybody benefits from basically participating in these changes that are happening. Now, in any case, you know, as hopeful as we want to be about, you know, the future of services, unleashing these new technologies requires market-friendly reforms. So we have looked at all the available data across different indicators, and I mean, although there have been good progress, there's still sizable gaps between reforms in many areas, across all areas, in developing AP countries, relative to a sample of advanced economies, for example, right? And especially so in the services sector. So going forward, we need to basically go back to these reforms, not just focus on macroeconomic management, and make sure that these reforms in services and in other areas continue, and they continue to boost productivity. So this was like a long view of what was going on, and it brings us to the last part of our update, which is talking about the looming challenges. And here on the screen, you see we mentioned decoupling, aging, and adaptation, but some context. So basically, there was a productivity slowdown, a structural change that was not productivity enhancing. Then the region was stuck by COVID. And then there were other shocks, including the war and financial tightening. And we have talked in previous updates about these other things, so we don't spend a lot of time here. But this combination of shocks that I just described was leading, as we have discussed in previous updates, to slowing growth and increasing inequality. But now going forward, the region must deal with all the problems that it has, and with at least 3 big, very significant looming challenges ahead. The first one, and perhaps the most important, is what we refer to decoupling. So basically, it's the increased trade tensions between the US and China. Now, this is perhaps the most important because the region, as you all know, has thrived through export-led growth in a world where markets were open and integrated. But now they face this emergence of trade tensions between their most major trading partners, right? This region has traded extensively both with China and with the US. So in the short run, it might look that the region is somewhat benefiting from the US and China imposing restrictions on each other. So some trade has been diverted towards the countries of the region. For example, look at Vietnam here, as increases exports to the US market, especially electronics. And some other countries have also increased their exports to the China market, for example, Indonesia. But we really try to stress out in this report, and I want to emphasize this, that while the short-term benefits do present an opportunity as value chains shift, in the long term, there are at least 4 reasons to be concerned. First, instead of trade being determined by dependable economic fundamentals, by reliable economics or predictable trade rules, nowadays we see, and this is some empirical evidence that my friends had done, Aditya and Shafat in Malaysia. So the political factors are also influencing the patterns of trade. So this phenomenon, which we refer as friendshoring, creates a degree of uncertainty. And basically that would hurt trade and it would hurt investment. The second reason, we argue in the report, is that there is a risk that different large markets adopt different standards. Like they could start from technology, like we've heard that, given the latest basically restrictions on the semiconductor industry, maybe China developed its own way of high tech, US its high tech, but then it could extend in other countries as well, and the standards of goods and services being offered to consumers. Now, that would hurt third countries, because it would prevent the ability of the countries to exploit economies of scale in an integrated global market. Then a third problem is that some of these restrictions, so we talk about US-China trade war or US-China imposing restrictions on each other, but these are not merely bilateral, right? These restrictions are on products. So these restrictions basically, it's not that it's just based on US nationalities, basically on where the product is ultimately consumed. For example, if we think of a semiconductor, it may be produced in a country, It may be shipped to a second country, assembled there as part of another good, and then shipped for exports to a third country. So if there is like a restriction on exports in any of these value chains, then all these countries along these value chains will be affected. And the same is true for imports. And now the problem for the region is that this region is one of the, is like most enmeshed, is very deeply enmeshed in global value chains. And this is the case both with China and with the US. So the types of restrictions that we're seeing, even if they're not directly on Vietnam, for example, they could erode many of the benefits that countries of the region were deriving from, the high levels of specialization within the global value chain. So this is reason number 3, but I said 4 reasons. Now, the 4th reason we think is the most important, and we also present some novel empirical results in the report. That's why I left it separately. The fourth, basically, the 4th point we should be very concerned about is restrictions on knowledge flows that are happening, and they could adversely affect innovation. So we already see some evidence that some of these restrictions, for example, this is the listed companies between that US is listing some Chinese companies. They are hurting innovation of Chinese firms which used to collaborate with US inventors. But at the same time, US companies which used to rely on collaboration with Chinese inventors are also being hurt by these restrictions and by this listing that we saw. So basically, we should really take this disruption of knowledge flows very seriously. Because, once, even if they are between countries or among select companies, they could reduce the global flow of knowledge. And that matters for the region, because innovation in this region, these are like patent citations, they used to rely a lot on flows from the US and other advanced economies, but increasingly so, they've been relying on these knowledge flows from China. If these knowledge flows shrink, then it would hurt innovation in the long term, it would hurt productivity, and it would hurt growth in the region, especially at the time when all countries in the world are looking for, better ideas, more innovative and transformative technologies to, bring all sorts of green technologies into the mainstream to reduce emissions, and they want to do this without sacrificing productivity. So basically, I hope I gave you like a sense of why this decoupling, and decoupling has a question mark, right? Because different people call it different things, but why these increasing trade tensions between the US and China are bad for the region. Now, the question is, what can the region do to deal with these difficulties? Right? It's one thing that we can give a policy recommendation to US and China to basically choose not to fight, but then let's assume this is the status quo. Well, what can other countries do on their own to deal with these difficulties? Now, we have argued in previous updates that the best response to the world which is retreating from globalization is not retaliation, but reform. And this would mean different reform of the region's trade and investment policies. And we've seen some type of these reforms in the region, in Indonesia and in the Philippines, although they've been more on investment, less on trade, but I think they are very good steps. Now, the second thing that we argue in the report, and again, there's like a very nice chapter on this that is called Decoupling ? I recommend all of you to look at it, is that when two large trading partners draw apart, like in the case of US and China, the best policy response is not to join one bloc or another, right? It's not to pick side. But so this expression is so it's better to become a hub than a spoke, right? So basically, it's better to form deep, meaningful trade agreements with each of the trading partners rather than try to say our benefit is with China, we're going to stay with China, or we choose US, we're going to stay in the US. In some sense, that's precisely what the region's economies have been trying to do in their credit. For example, think about our RCEP agreement. So has successfully created a meaningful mutual market. So it's given access to China and the countries in the region. Now, arguably, is not as deep as, for example, the CPTPP, but we know that US pulled out of the CPTPP. So ideally, the countries would try to figure out a way to either bring the US in that agreement or form another agreement with the US, which they do not have yet. So there's also some other smaller initiatives in the region, like the Indo-Pacific Initiative, but that is not really being conceived as a trade agreement, so we don't talk much about it here. So basically, just to sum up, ideally, or the best response given the circumstances of the country, so ideally we'll have a multilateral global rules-based system, but the second best response is deep trade agreements with all trading partners as much as possible. So anyway, now we're done with the first challenge, and then we turn to the second challenge, which is aging. So I guess this has been concerned for many years in Japan, but the countries in the region are facing now the threat of aging, and faster than ever. Now, there are good reasons why the region should really worry about aging. The pace of aging in the region is actually really frightening. So if we think like countries like France, US, and UK, it took them, I don't know, between 50 and 100 years to go from what we refer to as from aging to age societies. Basically, that means from to the point where 7% of your population is older than 65-year-old, to the point where that ratio becomes twice that much, to 14%. So, as I said, it took France like 100 years to go there, it will take the countries in the region almost like 20 years. And this is worrying. At the same time, countries in the region will get older, so their working age population will peak at much lower levels of income than in advanced economies, right? So if we think that the US is one, countries in the region, marked in red in this graph, will basically, their working age population will peak when they are at 20 to 40% of what US GDP per capita was when their working age population peaked. So the region will age faster and at a time when it is still relatively poor. So it's not that it will grow rich and then, okay, it's going to age. Now, we identify at least 3 problems going forward. And here for to make sure that we don't run out of time, we have condensed the presentation a bit. So first, a lower share, this is like very classical, a lower share of the conventional working age population would hurt productivity, would hurt comparative advantage because it would change endowments in the region, unless a region finds ways to basically encourage women labor force participation and also make sure that all the elderly population continue to work for longer. Now, the ways that they can do this, first, there are some work to be done in terms of age discriminatory practices, but also, you want to make sure that there is training and that also you should harness the new technologies to give them better opportunities to do the work, so they don't have to rely too much on manual work as they go older, physical work, but they can utilize better technologies. Second challenge is a fiscal one, is that the burden of pensions will basically crowd out investment unless the gap is narrowed between the contributions that people make now and the benefits that they will eventually receive. So if we think, for example, countries like China and Vietnam, when they have like a large civil service pension commitment, they will need this type of reforms going forward because in the future they might end up having more money. Spending more money than they have in the past. And then is the problem of health. So now these age-related non-communicable diseases, like for example diabetes, hypertension, are going to become bigger problems going forward. Now, what we argue in the report is that healthcare needs to be rethought to not just deal with this disease when they happen. So even if you had the money to spend on them, but basically to manage these diseases across the whole life cycle. Right? You cannot wait to treat this disease when people are old. You have to try and prevent this disease when people are young, both to ensure that people are healthy and to make sure that you don't impose, large cost burden on your economies. Finally, the last part of the presentation, we deal with arguably the most existential challenge, not just for the region, but for the world, and that is climate change. Now, we have in previous reports, and the World Bank has said so many times, they have highlighted the need for the world to work together to curb emissions and prevent global warming. But in this report, we actually focus on one other aspect of what is happening with climate change. Basically, we emphasize the fact that the region is not just a contributor to climate change, but it is also hugely susceptible to the effects of climate change. And in addition to mitigating, we focus in this update on what we basically adaptation. And a lot of great work has been done by the World Resources Institute, and we argue in this report that we are probably, or the countries are probably underestimating the benefits of investment in adaptation. Because it is not that you avoid losses by adaptation, but adaptation induces other economic benefits and also social and environmental benefits. So when we improve, for example, flood controls or install early warning systems, we do not simply avoid losses, but reap other benefits, both economic and environmental. Think, for example, when they plant mangroves, so they basically plant trees to help abate the cost of surges. Now, the first purpose is you're planting something along the coast, so it will basically break the waves a bit. But then this ends up supporting the local fisheries and also forestry, right? And it will help the economy. At the same time, all those trees will store carbon, so it will help the environment. So to argue that these are triple dividends, and basically some estimates, these are for advanced economies, but we highlight them in the update, is that the investments in adaptation can have benefits which are basically up to 10 times more than the costs, which is a great thing, great return, right? So one central argument in this report is that perhaps we have underestimated, the investment. Not only we have underinvested in adaptation, but we have also underinvested in understanding how important or how to make investments in adaptation. So to conclude, I'll just summarize 4 types of policy actions that we argue in the report are needed. First, basically, we need to build sound macroeconomic policies. The region has done so already, but they need to continue with deeper macro-financial reforms, basically to enhance the capacity of the state, both to support recovery, again, this comes from other updates during a crisis, but also think about longer-term, more inclusive and sustainable growth. Second, hopefully I convinced you that this structural change has run out of steam, and again that's because of the excellent work that our colleague in our office, Daisuke Uzawa, did with us. but we need structural reforms to remedy the huge reform gap that I try to emphasize. And basically, it starts with services, but those reforms also will spill over to manufacturing and to agriculture. Third, as I said, we need to basically focus on the issue of climate change and think about policies which will enhance resilience, but this time through efficient adaptation. And finally, arguably the most pressing is we need meaningful international cooperation to deal with the problem of global warming, but also we need to ensure continued openings to trade, investment, and technology flows. As I said, ideally, this cooperation will be multilateral, like across the board, but given the circumstances, even regional and bilateral cooperation could be fruitful. Thank you very much. This was my presentation.
Thank you very much, Aegis, for your presentation, sharing the main findings of the latest edition of the East Asia and the Pacific Regional Economic Update, April 2023 edition. So before reading the question that I received from viewers, I have a question actually about the slide number 23 when you talked about the restriction of the knowledge flow. And you were showing this very interesting image of comparison between 1993 to 2001 and 2014 to 2019 in terms of the knowledge flow from US, advanced EAP, ASEAN, and China to EAP countries. Now, on that, I realized, and also you mentioned that 2014 to 2019 chart shows the increased portion of China as a knowledge source. But also, I noticed that this knowledge flow from China to China is very obviously a very huge portion actually on the graph. Just wanted to double check and ask you to elaborate about this knowledge flow from China to China.
Well, so the chart, I mean, thanks for the question. This is very nice. Basically, we're looking at the backward citations, right, for patent applications. So it's basically where the site, so you apply for a new patent and where the citations come from. Now, there's no doubt if you look at, you can look at that measure in isolation, right? Within a country, what has been happening to, say, citations from, so within China, over time, what has been able to citations from Chinese investors and what has been happening to citations from other investors, right? Now, as China has developed and as China has innovated, and we are not disputing this is a fact, and they have done a great job. They've been using more and more their accumulated knowledge in their program. But still, the chart, I mean, I don't focus that much there, but maybe it's like 40% is from China. And so there's another 60% of citations that will come from other sources, right? So once those flows are disrupted, China will also lose. We did not focus on that, you're right, I didn't mention it, partly because our focus in the update was what happens to third countries. Because over the last couple of years, there's been a lot of work about what happens to US and China as they deal with this trade war. There's a lot of interest about what has been happening to third countries, not so much evidence about the reallocation of value chains, etc. But our focus was what happens to countries, and I think this was an interesting evidence.
Thank you, Aegis, for your explanation. So let me read the question that we received from the viewers in advance. Those questions came from Sasaki-san. Thank you for your question. First one, would you please mention concrete examples about new digital technologies boosting productive growth in services in the region? Among EAP countries, which are the countries most likely taking advantage of digital technologies for growth? That's the first question.
Okay, well, thanks. That's an interesting question. I think we have more emphasis on that in past updates, where I recommend they're looking at the past updates. And actually, the chart that I showed here is from a past update. Now, as an example of technologies in services, now the most productivity enhancing are the technologies that have to do with that help with like the management flow, basically how to digitize counting, to do other things organizationally that will help the firm. But another technology that almost every firm adopted when COVID hit was basically doing online sales through a website, right? Even that, we argue, is productivity enhancing. It's not as enhancing than some other technologies that are basically digitizing their management structure, but or inventory structure. But even this retail, basically online sales, are an example of technology that increases productivity. In terms of which countries, so if I go back to our past updates, probably don't have good examples, but we had this map, and I must have shown it at least twice in our past examples. We had this map of broadband speed. So now one issue when it comes to basically adopting these technologies is that you need to have reliable internet. And we had this map of basically the spread of broadband speed, I think 3G, 4G, 5G, right? And it's not as good in many countries. In England, China is a little ahead there. And then you can think Malaysia and Indonesia and Philippines and so on, right? But so if the internet is slow, then there's so much you can do. The internet is faster, so you'll be more dependable. If you want like a system where you can log in and check it on that system across locations, then you really need to have a reliable internet. So that could be a problem. I'm not naming countries right now, but I'm happy bilaterally to send the reference to that particular update.
Thank you very much. The second question from the same person. Aging seems to be making huge impact on EAP countries in a longer term. What are the policy priorities for EAP governments to focus on in order to tackle with this challenge of aging?
Yeah, thank you for the question. It's a very thoughtful question. I mean, I went a little bit, through it during the presentation. Maybe it was too fast at the end, but in my opinion, the most pressing priority is to try to enhance labor force participation. A lot of countries have significant gaps between men and women, right? And increasing women labor force participation will basically increase potential growth and will bring economic benefits. And then when it comes to the issue of aging, we need to figure out ways to make sure that elderly people can continue to work for longer in ways that will not go against their health, right? So we argue that there should, policymakers should try to harness technologies to make sure they facilitate the work so people can work longer if needed. So this was on basically getting people to work, the supply side. On the fiscal side, again, we have like a long list of discussions and reforms in the update. aging is like a separate mini chapter. It's a short one, but very enlightening. And I should say it was done, we relied on work done by Philip O'Keefe, who used to be at the World Bank and now he's in Australia. And so if we think basically across all these economies, how much they are paying nowadays for retirement, so basically the social security schemes, and then how much we estimate will be needed in the future, there's a significant gap. So that significant gap should be closed eventually to make sure that in the future the systems don't go bankrupt and the fiscal burden of the consumers increases. And also on the disease side, right, as I said, it's not just wait for the disease to happen, because as people live longer, they will have to deal with more health issues for longer, but try to manage at least the predictable diseases during the life cycle, invest more in making sure that, here in the US, there's the issue of weight, obesity in some countries, etc. Make sure you don't get there, right, rather than waiting to get there and spend the money.
Thank you very much for your responses. So, before concluding the seminar, any final remarks, final messages from you, Aegis, please?
So, I hope I was able to overview of where we stand. I probably should have said this in the beginning. We have made a choice in some things that we will try to cover everything. I will try to focus on a subset of issues every time. But I encourage everybody to visit our website. The easiest way is just go to the API update for the bank. Because there, not only you can find a report, you can find the data and charts if you need to use them for your own purposes, for your presentations. There's the presentation, but also there is a list of other policy areas that we have covered in previous updates with links you can go in. Again, thanks for inviting me. It's always an honor to do this, especially since one of our closest collaborators was also from Japan. Really appreciate this.
Thank you very much, Aegis. We had a pleasure of having Aegis Islamaj, the senior economist for the East Asia and the Pacific Chief Economist Office, having together with us this morning, presenting the main point of the latest edition of East Asia and the Pacific Economic Update. Thank you very much, Aegis. Thank you. Great. So we are going to have two morning seminars next week, continuing our journey to future different regions in terms of the regional economic update. Tuesday, April 18th, we are going to feature the Latin America and the Caribbean economic review, featuring the chief economist, Will Maloney, presenting the main point of the Latin America and the Caribbean economic review, the latest edition. That's the Tuesday, April 18th, 8 a.m. in Japan Standard Time. And also Thursday, April 20th, we are going to feature the South Asia Economic Focus Spring 2023 edition. This is a South Asia version of the regional economic update. We are going to have Zhou Leiyu She, who is a senior economist, and Mariozzo Bussolo, who is a lead economist in the Office of the Chief Economist for the South Asia regions, presenting the main point of the South Asia Economic Focus, the Spring 2023 edition. And this is going to be 8 a.m. April 20th, Thursday, in Japan Standard Time. With that, I would like to thank everyone for watching this seminar. We are looking forward to meet with you on the screen next week. Thank you very much.